Hello everyone, welcome to Dickson's Financial Accounting 101 tutorial 2. And today I'm going to teach you the basic principle of assets in the balance sheet. So I would like to give you the definition of a balance sheet. A balance sheet is a statement of the assets, liabilities, and capital of a business or other organization at a particular point in time, detailing the balance of income expenditure over the preceding period. The balance sheet presents a company's financial position at the end of a specified date. Some describe the balance sheet as a snapshot of the company's financial position at a point, a moment, or an instant in time. For example, the amounts reported on a balance sheet dated December 31st, 2012 reflect the instance when all the transactions through December 31st have been recorded. So I would like to emphasize why is it called the snapshot. A snapshot of the past company's assets, liabilities, and equity. And after that date, the balance sheet is obsolete because we don't know what will happen on January 2013 in case if the company gets robbed or gets inventory stolen or has a fire, and that will not accurately reflect the company's balance sheet. So a balance sheet is very important. It highlights the assets here, which I put in bold, the liabilities, and the owner's stockholders' equity. So in this tutorial, I would like to just focus on the assets. Assets are things that the company owns. They are the resources of the company that have been acquired through transactions and have future economic value that can be measured and expressed in dollars. Assets also include costs paid in advance that have not yet expired, such as prepaid advertising, prepaid insurance, prepaid legal fees, and prepaid rent. And there are usually three definitions of an asset. The asset has been acquired. Does the company own the asset? And does it result in economic benefits? So those are the three things. And here are the examples of assets. So we have cash, which is currency, coins, notes, and that's cash. And we have petty cash, which are cash that are usually for small disbursements such as supplies and postage. And investments are very common. Investing in a machine, these are assets that can be sold in the near future. And we have current or non-current. I'll explain that more later. And we have accounts receivable, which are services on account and invoices. And inventory includes merchandise, goods, toys, and all those inventory that the company will sell. And like I mentioned above, prepaid, anything that's prepaid insurance or advertising, insurance, legal fees, they are also considered as an asset. The reason why is that they have been paid in advance and has not been expired or used up. And they can be usually converted into cash within the first 12 months. We have land and buildings. Buildings can consider offices if the company purchased it, and land long-term assets because they're going to incur for more than 12 months. This might be new to you. Goodwill. Goodwill are usually intangible assets that shows the reputation of a company. Goodwill can only be measured when a company buys out another company, and that dollar value can be measured as goodwill. So here, just remember all these and learn these because these are very common. And I would like to show you the categories. As you can see, my current assets are assets within the first year. And then we have non-current assets, which occur for more than a year, for more than 12 months. We usually have investments in assets. Here is property and equipment. And these are long-term assets. Intangible assets, goodwill can be classified as intangible assets. Buildings and land will be in property and equipment. And any investment on machinery can be considered as current or non-current depending on the situation. And we have other assets. That's all other assets that's not classified in there. So I hope you have a better understanding of what is an asset. Once you have that, you'll be able to compute a balance sheet very easily. So I hope you guys like this tutorial and give this a try. Thanks for watching.